Hey, it's Denise, the Mortgage Nerd, with a really quick mortgage rate update. So a lot of clients and even real estate agents have been reaching out to us saying, hey, what's going on with rates? We saw that the Feds just announced their federal funds rate drop, which is not the same as mortgage rates, but they lowered the federal funds rate. So what's going on with mortgage interest rates and what can we expect for 2026? So I just wanted to show you, here's today's rates. Here's where they were yesterday, all last week, and this goes all the way back to September. Now, this doesn't really tell you much because it doesn't tell you what the rate is, but it is showing you the movement in bond pricing, which is what impacts mortgage rates. If you want a more average look at where rates are, we track this every single week. So what you can see here is this is August 28th of 2025. This is your 30-year fixed, 15-year fixed, and it's using a global average, so very average FICO scores, down payments, type of home, all that kind of stuff. But I just want you to see the pattern. In August, we were looking at 6.5. The next week, it was 6.5. The next week, we lowered a little bit, lowered a little bit. Here's where we are now. So you can see this is when the Feds dropped their federal funds rate. This is what we were the week before. So we actually went up a little bit, not a lot, like teeny, teeny, tiny. But you can see we've been very, very stable since really September. We haven't moved a whole lot. And so people are like, well, Denise, I thought that rates were going to go down. Well, here's the thing. If we look at the average decade of interest rates, so if you look here, you can see in the 1970s, the average rate in that decade was 8.8. The next decade, it was 12.7. And then in the 90s, it was 8.12, 2000s. And then in the 2010 decade, this is really the decade we're all comparing to, is when rates were really low. But the truth of the matter is we might just be back to the new norm of low 6% interest rates. No one knows that for sure yet, but when we look at this, really the unicorn decade was this prior decade that we were just in. And what economists monitor in order to look at, well, where will rates land in 2026? They look at three main things, but the two most important are the unemployment rate, which we've seen go down. Some are expecting them to go even further down just with AI and all that kind of stuff. And then we're also looking at inflation, which has been going up a little bit. It's the opposite direction that we want. Some are speculating that it has to do with tariffs. That's not a political statement. That's just what the economists are saying. And so where majority of economists are predicting mortgage rates to go in 2026, look at this, is pretty flat. And so when we look at the prior decades, will it stay flat? I mean, right now we are in the low sixes. So if you go to my website and you check on every single week, we update what the current rates are. So you can click here to get started, or you can click here to view rates. When you view rates, you'll see a snapshot. Again, it's going to be the average of where rates are based on FICO score, down payment, all the things. It is based on a primary home, not a refinance. But you'll see, without clickbait marketing, what the very average interest rates are. And so in the 30-year conventional rates, we're still in the low sixes. These government loan programs were in the high fives. And so that's where we are currently. Are we going to stay there? Nobody really knows. But what the economists are predicting is we're going to stay flat. The reason why that's important to you is if you are especially a first-time buyer and you're paying rent right now, and you're considering buying a home, but you were waiting for rates to come down, I would just caution you on that based on what we just saw. And the reality is this market we're in right now is the best market we've seen for buyers because sellers are covering all closing costs. We have loan programs that allow for 0% down, and you have a large inventory to pick from versus like in 2021, as soon as a house you liked went on the market, it was gone. So you can take your time, view your homes, you get a really good deal. Some would say this is buying at the bottom of the market. Now, if you're selling and buying, a little bit different story. Usually if you're buying and selling at the same time, you're going to make it up on one side of the transaction because you're doing both. But if you have family members or friends or coworkers that have said the words, we're thinking of waiting for rates to come down, I just want you to be careful with that because none of the economists are predicting significant movement in interest rates. So as you know, I'll keep this updated for you guys. If you have any questions, reach out anytime.